order. Would you please stand and say the pledge of allegiance? Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. And now Reverend Don Walker will lead us in an invocation.
Let's pray. Father, we come before you tonight and just acknowledge that our need for you and that subjects like this are bigger than us and smarter than us, Lord, and we just need your wisdom and guidance. I pray that you bring a spirit of peace and understanding, that there would be, we'd be quick to listen and slow to speak and slow to get angry, Lord, and that you would, your spirit would prevail. I pray that you would just guide us through and that in the end, Lord, we would know that you are with us. We thank you for being here. In Jesus' name, amen.
Roll call, please.
Barry. Boudreaux.
Here.
Vaughn.
Here.
Crockett.
Here.
Guskey.
Here.
Zimmelman.
Here. I would like to postpone the public participation until after the audit is finished. And auditors are going to ask the trustees at the end of their presentation if they have any questions. And then they may take questions from the audience, right? And I've also been told by the videographers that no bad language is to be allowed tonight, because if that happens, the tape of our meeting will not be posted on YouTube. It will be sent away and audited to take out the bad language, and we won't get it back for at least 2 weeks. So please stay calm, don't let your emotions get the best of you. And tonight, I'd like to introduce our auditors, Jim Edmonstone, Chris Edmonstone, and Taylor Rodina.
Good evening. Oh, it works. Hi. We appreciate the opportunity to do this examination for you. And I was going to do slides, but we were talking about today, and I think it'll be easier if I just go through the report and share some highlights. And also for the trustees, and they'll be able to follow along because they have a copy. And if you have any questions at the end, then I can highlight whatever your questions are. And, so let me get what this is. Am I on?
You are?
Just on that TV there.
Oh. Okay. Cool, okay. So what I'm gonna do is I'm gonna go through some of the highlights and some of the exhibits we talked about in our report. Our report, we focused a great deal on cash. And I was asked just before I came in to go through the difference between a financial audit, which you have every year, and what we do in this examination. We also do internal audits, so I'll go through it really briefly. So when you have a normal financial audit, they're looking at the financial statements that you've produced as the village. And they are testing whether they're correct. And so they're testing it. And I would advise you, when you go through audited financial statements, you really want to focus on the footnotes and work backwards, because a lot of times it's the footnotes that tell the story of what you're looking at. We do internal audits, and an internal audit would be where, and all companies do internal audits, and that's where they're going to take the policies and procedures for the department, the company, whatever it is, and they're testing whether or not the entity you're looking at is complying with the policies and procedures that are in place. What we did here in the forensic, we're brought in to do forensic audits. Sometimes some municipalities have literally called us in to do a forensic audit, believing they have no problems, and they either want one done just to have self-assurance, or in some cases, we did one in Ohio, for example, where they had a policy in place, I think it was an ordinance, that when their financial person would leave, they were required to have an audit to make sure there were no issues. And then sometimes we're brought in because there is a specific concern or allegation. We did one a couple of years ago where they already knew that somebody was using, it was a public entity and they were using the funds. And in that case, the police were already involved, but the police wanted a report from us before they decided whether they were gonna pursue the case. And we do quite a few of those. We do public ones, we also do private ones, and we also do forensic examinations of businesses. And sometimes it's because there's a dispute between two business owners. So your village is set up with a number of different funds, and we laid them out here, the general fund, the special community fund, and I'll go through them. And what we did on here is we put down the fund numbers, and then you have a police pension fund, but the pension fund is run by a separate board. And one other thing I wanna do, so the way this report is put together, this is 100 and some odd pages of the findings and a discussion of the issues that we've identified, as well as our recommendations. There's another report which we've already produced a draft, and we'll produce a final in a few days. I'll send it to you electronically. And those are going to be the exhibits. And I'll go through some of those exhibits as they pertain to it, but the exhibits overall, they're gonna have the details of the bank activity. Each account will have the summary of activity by month for the 5 years. And a couple of accounts, we've gone further, and we've laid out all of the activity for the account. For example, the 0214, where they run through all the checks and everything. We've actually got every check that ran through there for every activity for the 5 years. 6 years, is it? Okay. And also, then we basically consolidate together, so you can see if Mr. X got 10 checks over 5 years, then we'll have every check that he got in detail, and then we'll also have a summary of how much he was paid in total. It will also have the financial statements, and then we've also put in some applicable laws that we found, both federal and state, and you'll understand why in a minute. And also some other helpful information that we found, which we believe would be helpful to understanding what we've done and moving forward. Okay, this exhibit here is going through the layout of your cash. So on the left, and I know this is difficult to read, but you'll be able to read it when it's posted online better. This represents the general ledger, which is on the left side of this document, and on the right side is the corresponding bank or bank accounts. So the way you're set up is the fund starts with the first 2 digits. So for example, the general fund, the first 2 digits are 01. And then you're gonna have certain accounts under the general fund. And then you're gonna have, under this line here, for special projects fund, okay? So the first 2 digits of that general ledger account is gonna be 03. Then over on the right will be the actual account numbers. We've put down the account numbers, we've put down the name of the account for the bank, and the entity, the bank that the funds are deposited in. Now, excuse me, I've had a cold, and I still have some leaks, as they say. I thank the treasurer for helping me put this together, because you have a lot of bank accounts, and you have a lot of cash accounts, and we'll talk through that a little bit later. And Homestar was merged with Midland, so when you see Homestar /Midland, that's just indicating that during the beginning of the audit, the bank was called Homestar, and later it changed to Midland. And, there was a merger, and then about 6 months after the merger, the, Midland started issuing the bank statements. And then as you'll go through too, I'll cover this right now. So as you're going through there, you'll see, on our summaries, there's an interest column. And you'll see when it was one bank, it's blank, and on the other bank, it shows it. The reason is one bank included interest in its deposits and the other bank didn't. So in the bank that didn't, we just separated it out so it'll all balance, and you can follow it easily. Okay, so I wanted to lay out a little bit about how some of the key components of how your money is invested and how the banks work. So the first one is the FDI insurance, because you want to make sure your cash is protected. And it's actually a kind of complicated. It's more complicated for a public entity than it is a business or for yourself. And so what we've done is we've laid out some of the key components here, and then we've given you some guidance in the sticker and some of the laws we've attached as the exhibits, and also we've given you some hyperlinks. So on a government account, and if you look at the definition here, it defines what a government account is. It's a federal government, state government, and other government bodies. First of all, they separate the policies or the rules by whether the bank, the institution is in-state or out-of-state. So in this case, of course, it would be Illinois, and the banks are treated somewhat differently if they're in-state versus out-of-state. In essence, you have more insurance if the bank is in-state. And the insurance is not that much, and so that creates problems for even for Manteno, and you can imagine what happens when you get to the state of Illinois. You get to agencies, you get to the city of Chicago, they're swimming in cash, and they have to figure out a way to protect the cash because they can't protect it through the FDI insurance directly. So in Illinois, if you put cash in Illinois in a bank, you have $250,000 for demand deposits, and you have $250,000 of savings accounts per bank. It's not per account, it's per bank. So if you have one account or 100 accounts, you're gonna have the same amount of insurance. If you put the money in an out-of-state bank, you have $250,000, period. Now, they divide the cash, they divide it between savings accounts and demand deposits. But they don't, the FDIC, it doesn't look at the way you define savings accounts. They have their own definitions. So you can have a demand deposit that pays interest, but that's considered a demand deposit and not a savings account. So a savings account would, for example, be money markets. Now, the other thing that is quite a bit different is who's insured. The village isn't insured, it's the official custodian. So, the official custodian is treated as the insured depositor. If you have multiple official custodians, each one is going to have their own sets of insurance, basically. We looked at Manteno, and we looked at the way you have the ordinance set up for controlling the cash, and you really have a split function. So you have the trustees who decide what bank to use. Then you have the treasurer who actually moves the money and puts it into the account. So you have two separate entities. I didn't mean to call you an entity. You have two separate parts that are making one decision. So the way that we're reading the law, the government would consider that to be one official custodian. So you have two groups, one official custodian. So that means that for in-state, they have $250,000 of savings and $250,000 of demand deposit per bank. So the government, according to FDIC, they, I know that they've talked about having more insurance, but right now there are these really, really low limits. So they will look, the FDIC will look at collateralization, and I'll run through some examples in a little bit. And basically, if the village obtains collateral from the bank that meets the requirements of the FDIC, they'll recognize that and they'll give you more insurance. But if the collateral doesn't work, then they're not going to honor it. In the definition of what is a official custodian, they talk about the plenary authority is to determine whether or not that person falls under the definition of official custodian. And I put in here the definition. I have a couple of definitions in here. We pulled them out of the Cornell law. It's a good place. We use it a lot. And their stuff is pretty concise. And we also give you the hyperlinks so you can look it up. But in essence, what the FDIC is saying is the fact that someone is a check signer doesn't make them official custodian. They really have to be able to make the decisions to run the accounts, open the accounts, close the accounts, move money into the accounts, move money out of the accounts, etc. Then this is all, what I'm quoting from here in the report that you're looking at is from the FDIC itself. I actually pulled out pieces of it. So down here, they took, because the government's run so differently, they also put in what misconceptions will be. They said custodians for public units, as an example, may not realize that public unit deposits designated for different purposes are not separately insured. If the funds are held by the same official custodian of the same public unit, the deposits will be added together when calculating insurance coverage. One thing here, if you have separate legal entities, you can have one official custodian be an official custodian of more than one entity. So in this case, you have the village, and then you have the police pension fund. Well, the police pension fund has its own board. My understanding is it's a completely separate legal entity, and by reading these laws, then Sheila would also have official custodian status for the pension fund. So she can be official custodians for multiple funds as long as they're completely separate. And you could redesign your process to have a different, more than one official custodian. But you would have to redesign it in order to meet the requirements that the FBI set out. And then you would automatically get some more base insurance. I'm gonna skip the bonding piece. I'll just talk about it a little bit. But I'm gonna come back to it in a minute in our observations because we go into more detail. The village ordinances require bonding. And I'm gonna go back, I wanna talk about this in more detail, so I'll do it in a few minutes when we cover our observations. Well, actually, I'll cover one little piece here. So you don't have bonds. You do not have bonds that comply with the village ordinance. What you have instead is you have $500,000 of employee insurance coverage. Chris went and wrote the insurance broker, and they wrote back and they explained you have $500,000 and it covers the employees, but I don't believe it covers the trustees. And that's one of the things we think you should look at, because since you're responsible for partly responsible for administering the cash, we think you should look at having coverage for it. And so here is the actual letter we received, that Chris received from the broker. And he or she wrote this, Nika. They explain what coverage you do have, and they also explain that some municipalities still want the bonds on top of the insurance coverage, and if you want that, they're ready and willing to do it. So right now, what we see is we actually see a conflict because your ordinances say one thing and your practice is something else. We also think $500,000 isn't near sufficient for the amount of cash that you're handing in. Okay, so the ordinance 2418 defines the duties of the treasurer, and I'll go through that a little bit more in a minute. CDARS. So one of the ways the treasurer handles your money to protect it because of the low limits is she makes agreements with banks. And then what the banks do is she'll put in, say, $1 million. That bank takes the $1 million and they disperse it to other banks up to the $50,000 per bank. And then my understanding is the way the bank works is then the bank is getting money back in another transaction, so they're still whole. But that way, your insurance, you have $250,000 at those mini banks, and I have an example I'm gonna run through in a minute of one of the, oh, here it is right here. So in this case here, this is with the Bank of St. Anne. And she made a deal for $3,250,000. And so what that bank did is they went around and they explained to her where the money's going. So what you have here is, here's each bank that they invested the money in. They divided it into small increments, and they did it for the period of time that she made the major deal, and this is where your money's going. And that's one of the ways that she's getting around the FDIC rule of the $250,000. And my understanding is too that this is run by the bank. This isn't going through a government entity. I think it's Mellon Bank that runs, it's InterFi, and we talk about that a little bit, and we also give you some references where you can read more about it. Another way that you can protect the funds, and the treasurer also does this, is the Illinois funds, which are run by the state treasurer. And that was created in 1975. They have 1,500 entities that are currently participating in it, 3,000 accounts, and they have net assets of over $20 billion. So if you have a lot of money and you want to protect it, that's another way to protect it. And she is using that. And here's an example that we put in the report of the Illinois fund statement. We've also quoted some of the aspects of the Public Funds Investment Act, and then from that, and the policies of what you can and cannot as a village invest in, and also the requirements. From that, the village wrote their investment policy, which I'm going to get to in a minute. Now, one of the aspects of this is that the village is supposed to go and receive copies of the last 2 sworn statements from the banks prior to them investing any money into them. So you'll see that all laid out here. Now, I believe it was 2001, but quite a while ago, there was a requirement that each of the public entities come up with their own ordinance, investment ordinance. But from what we saw, the village didn't come up with an investment ordinance till 2017. And the investment policy is included in our exhibits, and we've quoted a few pieces from here. And this was also amended slightly in 2018. And this defines the role of the village board and the role of the treasurer. So, for example, this is the actual ordinance. The president and the board of trustees of the village of Manteno shall be responsible for all public funds. Well, thank you. They're gonna define the investment policies, they're gonna review the adequacy and need to change in the investment policy, they're gonna meet and review reports, and they're gonna select the financial institutions authorized to accept the, fund assets. And if necessary, they're gonna, select investment advisors and managers. The treasurer is the chief investment officer for the village, and is invested with the authority and responsibility to manage the investment program and establish and implement written procedures and internal controls for the operation of the investment program. And then it further defines it in our report. Go down to our observations. On the FDIC, we've already covered pretty much what we have in our observations, so we'll keep going. We did this, analysis here for another part of the report, but I'm presenting it basically twice, the same document, and I apologize, it's a little bit difficult to read. So what you're gonna see in the left column behind me, these represent the bank accounts that Manteno had during our examination period. And what you're seeing here are the last 4 digits of the account number. In a few cases, they're not accounts, they're investment vehicles. But the same applies. We put down here what bank it is and what the name of the account is. And then we also put down what the bank said the name of the account is. And we put down as of July 17th, 2019, we put down the balances. Now, in some banks where there's not a lot of activity, they don't give you the balance on July 17th, 2019. They give you the balance as of the last time you did something. And in some of your accounts, you may not do something for weeks at a time. But in essence, you had, at that point in time, you had 31,219,000. And if you look at it, you had in, you had a $25 million investment, which was the aqua funds. Then you had savings accounts of 3.9 million, and the rest were demand deposits. So some of the savings accounts that are labeled savings accounts in the general ledger were actually considered demand deposits. I mean, they're considered demand deposits by the government. You also had some money in the Illinois fund. We'll come back to this a little bit later. Okay, bonding we talked about here. If you think about it, I just said that you had $31 million in your bank account as of 2019, and you had $500,000 in insurance. So if there was a problem, you really didn't have any insurance to cover it. You really weren't properly bonded. If something had happened, you would have been insured. So we're recommending that you revisit this whole situation, and you also look at bonding the trustees themselves, because the trustees are actually making a lot of the decisions. Now, we also looked at the CDARSs, and one of the things, as I mentioned before, it says, NFI is not an FDI insured bank, and deposit insurance covers the failure of an insured bank. Certain conditions must be satisfied for pass-through FDIC and deposit insurance coverage to apply. And we're not commenting anymore, but I just wanted to appraise you that you do need to understand what the limits are of using those. Now, the requirement for receiving sworn financial statements before putting money in it, we didn't see that taking place. We also don't know, and we don't have a clear understanding at this point, whether that requirement pertains to banks that you're investing in under the CDARS process. I think that needs to be clarified. Now, with respect to collateral, we did ask, and the treasurer furnished us examples of collateral statements. We've put 2 examples in the report. What I don't see is I don't see an overall policy and plan to make sure that you have the proper collateral as you're moving money from account to account, which we'll talk about a little bit more in a minute. Now, also, we compared the Manteno investment policy to the state, and we're recommending that you go back and relook at that and make sure that they're in sync. Now, sometimes the village may be a little bit more restrictive, but there are, we gave an example here of the statement that material relevant decisions useful to sustainability factors. We didn't see that in your investment policy. We see it as a requirement in the state policy. The most concerning issue is the written procedures. So the state requires written procedures. The Manteno investment policy from 17 requires investment procedures, and we didn't see them, and we did inquire about them. So, my understanding is that they're now being drafted. However, I wanna go through those a little bit. Right now, what we see is we see a lot of authority and responsibility and accountability invested in the treasurer. And we believe that her job should be somewhat split. So, for example, she's reconciling the bank accounts that she's writing checks from. And a good policy would be that the bank accounts are reconciled, the statements go to a different person. That person reconciles the account. And the treasurer, that way there you have that's an internal control. Right now, the treasurer is writing the check, she's moving the money, and she's reconciling the accounts. It's all in one person. And it's something, it does 2 things. First of all, it's a lack of internal controls, and if there is an issue, then you're basically putting all of the, I didn't want to use the word pressure, but you're putting all the responsibility on her to defend herself if there's a question. Whereas you want to go along and you want to have it so you have one person doing this job, and then especially when it comes to cash, you want to split the responsibilities. Segregation of duties, thank you. You actually, then the next piece, we didn't see that every bank account has a corresponding general ledger account. In order for somebody else to be reconciling the accounts, you need to have every general ledger account and every bank account need to match. So right now, you have a payroll account with no corresponding general ledger account. The reason you have it that way is the payroll account is being treated like it's a third-party account. So it's being treated like ADP is the one processing the payroll. So you write the check to ADP, you send the tax money to ADP, you send the pension money to ADP, and they disperse it. But you're not doing that. The bank account actually has the village's name on it. It's a village account. It needs to be it's the village name, it needs to have the general ledger account. On some of the accounts, we saw that in a few cases, you have one general ledger account with multiple bank accounts going into it. That's really, really, really hard to follow and difficult. You can have one general ledger account, but then you can have sub-accounts for each bank. So if a third party's coming along like ourselves, or say, the third party that's gonna be reconciling your accounts, they can go and they can trace it. They can see that if you did something on this date, you're gonna see the corresponding entry in the general ledger on the same day. And sometimes, when things are rolled over, they don't necessarily make the corresponding entry. The other thing that, that caught our attention are the transfers. You have a pretty good system when you write checks. So you write checks, the treasurer puts together a list of every check that she's issuing. And then each trustee meeting you meet and you go through that list of checks and you decide whether you want that check to go out. And if you don't want a check to go out, then you say, no, I don't want that check to go out. And then that is published. But when it comes to wires, you don't have near any of the controls. You don't have a process for the wires. You don't have you have the treasurer moving the money, but really nobody approving it prior or post. It should be prior. And you're moving, the problem with wires are, even if you're moving them between banks, they're a lot of money. And a lot of times when the wire goes, it's really hard to get the money back. And some of those wires are quite large. And then, so I have some examples here. And Sheila has provided some background to some of these, but I just wanted to put the example in here. So here's one on May 18. It says telephone transfer by Sheila Martin. So she moved $1,500,000. It's not saying that she shouldn't have moved the money, but the bank statement doesn't really tell you. It doesn't tell you what it's for. It didn't tell you where it was going. When you move the money, if you look right below that, if you move the money through the internet, their online system, then you basically can say, you know it came out of this account and it tells you where it's going. Excuse me, I'm sorry for the cough. And I've also put, I won't go through, but I put in here in the report the documentation she gave us to explain that particular wire. And it's several pages. Here's another example here where a telephone transfer for $12 million. That's a lot of money to have really no explanation on the bank statement. We don't know what it was for. If that money had been going out of Manteno, it could possibly have had the same explanation. And here's another one coming in, $1 million. So the only way to trace this is actually to go through the general ledger, but here's an example here. When you got the money from Aqua. Now in this case, Aqua wired the money. So what you see here is you see $25 million deposit going into this account, and this account was created specifically for the Aqua transaction, and when the transaction was finalized, the account was closed. And then you see what is styled here are two checks for $25 million. But they're not really checks. If you look behind it, they were more like this, counter discussions. And it's a little bit difficult for us to understand exactly whether this was done in person, whether this was done on phone, or how this transaction occurred. What the purpose of the transaction was, is she was investing the money overnight. However, if you look at the dates, you'll see that the date that the money comes in and the date that the money goes out there's a day lag. So what you've got in essence is you've got $25 million sitting in essence uninsured in the bank overnight. And we see that twice in this 1 month. Now, the next thing I wanted to talk about is there is, both in the Manteno policy and in the Illinois Public Funds Investment Act, there is a specific law on a corporate authority doing business with banks where they have a personal interest, either directly or indirectly. And they specifically talk about the treasurer in the position of the treasurer. And they have 3 particular rules. 1, they can't be doing business with an institution that has any interest directly or indirectly in any of the village investments. Have an interest directly or indirectly in the sellers, spouses, or managers, sponsors or managers of the village investments, or receive in any manner compensation of any kind. Then they also reference in this particular act, they reference 2 other acts that are not part of it, where there are exceptions. So we've entered this, we've also put down what the exceptions are. Then I brought this up to, before I get there. So in this case, we found the treasurer in the village, they were doing business with banks that there were relationships with village officials. So in Homestar Bank, the treasurer's spouse was the president and a director of the bank. At Midland, the president, when Homestar went away, then the treasurer's spouse became an executive with Midland. Later, the spouse became an executive with Iroquois. And there's another bank with St. Anne's where I understand the son-in-law of I believe it's the son-in-law of the former mayor was an executive, was the president of that bank. And now I brought this up to the treasurer and to Chris, and Chris contacted the village attorney, and the village attorney wrote an opinion of what he believes, whether or not he believes there's an issue. He doesn't think his email back to Chris, which Sheila provided me after we went through the draft, and this was done back in February, but I just received it in the last week or two. He doesn't believe, according to his email, which you'll be reading, that there's an issue, but you're welcome, and I'm not sure. He's talking about this from the standpoint that we're doing business with a lot of banks, and he's also referencing an Illinois case that just came up, I believe it goes back to 1977. So we're not lawyers, we're just putting in there what we found in the statutes and in the Manteno investment policy and the village attorney's opinion, and you can get the trustees to decide where to go with that. And the treasurer also, when we were going through, we went through a draft of this before we did a final. So we sat down and we went through everything, and we gave the opportunity for the trustees and the treasurer and the village administrator to go back and give us some feedback, which we appreciate. And we got quite a bit of feedback from the treasurer. We've incorporated a lot of it into our report. And this is an example here of the reports that she puts together. And she provided a copy, and I put a copy in here. One of the pages, this report is many pages, but I didn't want to drag it out. But you'll see a copy in here of the one page. And then she also provided a copy, which we had, of the fiscal year. And I've actually seen this exact report with other villages that we've, in cities around Illinois. And basically what they've done with the money for the year. Okay, go to the cash and the cash activity. So during the first scope of the examination, this is off of the financial statements prepared by the auditor. So we looked at the cash balances in total, and we've broken it down between cash and equivalents investments and the total cash according to their definition. And you went from 34.6 million back in April of 2020, and as of April 30, 2025, you're down to $12.5 million. And this basically is the journey that your cash took. It's basically decreased by about $22 million over that period. Now, what follows here is, what we did is we took, as I explained a few minutes ago, we have each of the accounts, we've put down by month, by year, your activity. We took the activity at the end of each year, we took the snapshot of that year and we put it into this overall document. So, for example, if you go down here, you'll see every account that the village had this is per the bank, not per the books, per the bank. And what the name of the account was, how much activity, how many credits, the interest, the total debits, and that, if you recall, when I talked about the interest a minute ago, it's treated differently by Midland than it was. So the interest is not necessarily a true discussion of all the interest you're making, it's only the interest that is separately stated that you have to tie into to get to the deposit. The beginning balance for the banks and the ending balance. There was one investment that we know the money exists, but we don't have the statement. So I've put that in red here, or we did, and you'll see that, but we do know, we just weren't able to see the investment. But we do know the investment exists, so we've labeled it, we've put it in there. And for this year, we were about $3 million under what the financial statements say. Now, you're always gonna have a difference because they're going by the book balance and we're going by what the banks say. You're gonna have outstanding checks and things, but it also could be indicative that we're missing one or more bank accounts. And we do believe that we are, in some cases, we're still missing bank accounts. The next year, you'll see the same activity and this repeats, and you'll be able to see how, on this year, for example, we came up with $35 million, and they are at $35 million, so we're a pretty good match. The next year, we came up with $33 million, they came up with $33 million, they being the auditors, as the balance at the end of the year, so we feel pretty confident. The next year, we have a pretty good gap, we're quite a bit off, so we do believe we're missing statements, most likely investment statements for that year. This year, this year was 2024. We also had a significant difference in, you had 18 million, we came up with 12 million. So when we say 12 million, that means we have bank statements that account for $12 million. The final year, we balanced 12 and 12. We're pretty good. Okay. Take a break for a second. Now I've covered the general operation of the cash at a pretty good level. The rest of the report, we're gonna talk about specifics on 3 things that we looked at. And this first one has to do with the use of the aqua funds. The second one is gonna talk about procurement and the bidding process, and we're gonna dive into some specific examples of the bidding process. And the third section is gonna talk about the whole history of the golf course and how it was sold. And I wanna be clear on this one here, we're gonna talk about Homestar Bank, and when you look at the report, you're gonna see some documents. We didn't do anything with Homestar Bank. We're only talking about the actions of the village. But in order to understand the actions of the village, we had to present information about the banks, so it would be a complete picture. Okay, so in 2017, at the end of the year, Homestar Bank had an audit report that the auditors expressed a going concern. They do that when the auditors don't feel they can issue a clean opinion. We have provided in our report, in the supplemental information, a complete copy of that financial statement. You can go through it. And as I mentioned before, a lot of times when you're looking at audited financial statements, you really want to look at the footnotes. The footnotes will give you a lot more background than you're going to get into actually just looking at the numbers by themselves. So without going through all the details, because you can read it, the concerns that we identified are detailed. We quote some of the concerns which we took directly from the financial statements of the bank. Now, in addition to that, the bank prior to the village receiving the $25 million. The bank for years had been operating on the consent decree, that's public documents. You're free to pull them up on the website, we did. And there was a consent order issued in 2010. It was replaced by another consent order in 2013. That consent order was terminated on April 23rd, 2018. Now that's before any money was deposited from the aqua funds into Homestar Bank, which we're gonna talk about in a minute. However, the last financial statement that the bank had would have been the bank statement issued in December of 2017. Now, I pulled the minutes from the July 11, 2018 trustees meeting. And the minutes state that the sale of the system closed, that's the aqua sale, on July 2nd. The updated rates for Homestar Bank for CD rates have been received. Mayor Nugent and Mr. LaRoe recommend that is to invest the monies received from the sale of the system on a short-term basis as interest rates are increasing. Half of the monies would be placed in a 6-month CD with interest rate of 2%, and one half of the monies would be placed in 1 year with CD rates of 2.25%. This would gain enough interest to pay the garbage fee. The village will also look at investing the monies that were in the capital improvement funds for the sewer system. What we think is lacking from this, what we don't see, first of all, when the village went out and if they did an analysis of available opportunities to invest, it's a lot of money. And also the safety and security piece, we don't see that. If that was done, it's not part of the minutes that were presented during the meeting. We see basically when they came to the meeting, from our standpoint, it looks like it was a done deal. We're gonna put the money here. Now, also, I mentioned the prudent person, and I've given you, that's one of the requirements for the investment policies. And the prudent person, one of the aspects of that is you have to diversify. You're taking all $25 million and you're putting it in one bank, and we've already said that this particular bank has some concerns. This is the same, we presented this again here, but this is the same bank statement you saw before. This is the actual investment of the $25 million from Homestar. So you can see there were 2 CDs. One was at 1.9%, one is at 2.25%, and then those were treated as CDARs, and they were reinvested with Homestar being responsible for the reinvestments. Now, the one CD expired in January of 2019. That money was rolled over, and what I've done here is we've put in, well, when I say I, it's actually all of us. But when we put, they had, in one of the meetings, they put in there, and the recommendation was to just roll it over, and it was rolled over. We have some documentation on this, but I don't believe we have the actual statement of the rollover. They got 2.3%. Now, while this is all going on, there's another thing that's happening too. In April 2nd, 2019, Midland Bank comes out and files a Form 8K with the Security Exchange Commission, and they announced that they're merging with Homestar Bank. And they put out, in their filing in the EDGAR system, they put out graphs and everything, and we've included that. And one of the things they're talking about is what they have in total deposits, and it's saying their total deposits are about $331 million. When you add the 25 million and you go back to that document I showed you before, if you look at all of the cash that the village had on hand as of the closing of the deal closed on July 17th, I think it's 2019. the village had 97.8%, I believe it is, of all of its money at Homestar Bank. That strikes us as concerning, among other things. And that represented approximately 9% of all of the cash deposits that Homestar had as of the date of the closing of the sale. Now, when the sale was getting ready to close, so now we're into 19. The village is starting to, what to do, we know, they're aware that the banks are gonna merge, it's very public. So, they have a meeting and they talk about the fact that there are options with other banks, fine. And in this statement here on page 89, they talk about some of the banks and opportunities to put money in different places. Then, on July 12th, they decide that they're gonna split the money. So what happens in essence is, here's the press release with the deal closed. As soon as the deal with Homestar Bank closes, they start moving money out of, which is now Midland, which is a much larger bank. They start moving significant amounts of cash out of that bank to other banks. But before, the 25 million stayed in Homestar for over a year before the deal closed. And we've also provided a timeline of the entire process so you can understand it. We didn't look at all before our time, we didn't look at the Aqua sale or anything like that. We're just looking at what they did with the funds and whether they were prudent in putting all that money in one bank, and also the timeline of when they started to disperse the funds. One of the things that's a takeaway from this, in addition to concentrating all this money in one local bank, there were meetings. For example, there's a meeting when they were going to move funds and they were getting bids. So one meeting says Midland's coming in and they're gonna give us a presentation on what they can do with the Aqua money. And they had a special meeting, it was June 15th, I can't remember if it was 18 or 19. I think it was 18. That's well and good, but the minutes that we saw, the minutes say they had the meeting. There's no discussion in the minutes of what Midland said. And there's no discussion before they moved the money. When they moved the money, they had a statement saying, we've got these rates, we're gonna put the money here. We don't know if they went out and talked to 10 banks, 2 banks. There's nothing in the minutes about what they did and how they arrived at the conclusion to put all the money into Homestar Bank or into another bank. There is no, as they're moving these large funds around, we don't see the process. And we, as if we were living in this town, we love your town, by the way. But if we were living here, we see other towns and they basically lay it all out. So when you look at, you understand the decision process, why they came to it. It's not a criticism of why they did it, it's the process of getting to it and the transparency of understanding what the process is. We're gonna talk about, now we're going to the second one, just talking about the procurement a little bit. As you know, so what we talked about, what we looked at here, one of the things we looked at, we're gonna go into a couple of examples. The former mayor, his family was doing business with the village. And his brother was also doing, business with the village. So in this process, we put in some information about both the state and the local, and the Manteno procurement policy. But we wanted to look some examples. So, what we have done here, we've gone back, and over the period of time, this is a relatively short period of time, and we looked at all the payments that went to a Nugent family business. There were 3 of them, but the concentration would have been Kevin Nugent Construction and Tenco. And during that period of time, there was $7.6 million paid to those businesses. And so what we did is on Tenco, we've gone back, we've actually put, these are the checks that cleared the bank. So we're also providing you copies of all of the checks, and one of the checks is over $1 million. These are some of the ordinances you'll be able to read, and the purchasing ordinances. And I did find, we did another village about your size some time ago, and I saw some things that were pretty similar there, and including some of the discrepancy of what the administrator has the ability to do, keep going. They had a case where they had their water system, I think, broke, and the mayor and the administrator, they had basically make some quick decisions. And you need the flexibility to go and make the decision, then go back after the fact and document what needs to be done. In that case, they made the decision, but they hadn't documented it. And what wound up happening after our report is the trustees actually had a meeting to decide whether or not they were gonna, at that point, go back, enforce the documentation, or move on with life. And they decided to move on with life. Now, in line with this, the way you're set up is the bids come in for construction. There's an engineer, and the engineer will lay out an estimate for the project. They'll go out and they'll put in an RFP, the bids come in, we open the bids, we'll go and give you some examples of that. And then the engineer will go back and compare the bids against his estimate and then make a recommendation. And we put in here also, going back to 19, that Mr. LaRock I expressed some concern about the cost of engineering, and having worked for an engineering firm, it can get expensive. Now, we talked a little bit about Mr. Hill, because Mr. Hill is the engineer that was, is involved in these particular bids that we're gonna talk about. Now, he was with another firm, Noverty, and in 2023, he left that firm and he went to work for a different firm, H.R. Green. And the village followed him to his new firm. But what we noted in following him, he increased his rates with the new firm substantially. We didn't see any rebidding, and we didn't see any negotiation to get his rate. I think he went from 130 to 261. That's a pretty substantial increase. And if I recall, he also increased his rates for his existing work. But the contract the village had wasn't with Mr. Hill, it's with the firm itself, the engineering firm. Mr. Hill was the person they were doing business with. And in fairness, the village has done business with other engineering firms. Besides that, we've given you some totals on that. But we wanted to focus on this one because this is tied in to the payments that went to the firms we just talked about. So, during the same period, Mr. Hill's firms received $1.1 million in engineering payments. We also talked about other engineering payments. Carlisle received, which were architects, they received $421,000 during this period. Robinson Engineering received $477,000, and Tyson received $548,000. we'll talk about the Legacy Park project. So there was in 2024, there was an RFP put out for work on Legacy Park Phase 2. There was the estimate by Mr. Hill was for $1,707,464. There was one bidder. The bidder came in at $725,895. So in essence, the bidder came in for less than half of the engineering estimate. A lot less than half. When Mr. Hill got this, he analyzed it, then he turned around and if you read this paragraph here, he says, after speaking with village staff on the project, some additional scope of work needs to be added, including lighting near the pier and enhanced landscaping for newly created berms surrounding the park. The additional scope leads me to recommend to reject the bid and rebid the project after revising the land specs to reflect additional scope the village is looking for. What raised a red flag for us is he did this after the bid came in. After the one bid came in, that's $1 million less than his proposal. This is what he provides with each bid. So if you look, you'll see on the right side is his proposal. In the middle here is the bidder, in this case Schwartz, how they broke down their costs. From this point, the village officials and Schwartz, now everybody in essence knows what Schwartz has bid for this project. They're sort of hanging out there a little bit. So in late 2024, the engineer, this happened in September, later in the year, the engineer re-estimates the project. Now he's estimating the project for, I believe it's $1.2 million. I have that information in a minute. And well, let's go through this. So the new bids come, the project is rebid, the new bids come in. This is the bidding form that at the opening of the bid. So there are 3 individuals, or 4, that attended this bid opening. It explains where they're from, but it doesn't have any bid amounts. There's another document from the engineer, and he has handwritten bid amounts. And it's a little unclear why there are 2 documents and if these were completed at the same time. Now, he then takes the bid back and he evaluates them. So now, Schwartz, on the bid they provided, said the bid was $998,900, okay. He found an error in the bid, fine. And he fixed it, he said the actual bid's $1.2 million. Tenco wins the job, they come in $18,000 under Schwartz. But Tenco didn't even bid the first time. So we went back on this spreadsheet right here, and we analyzed the bid itself and the components that were changed from the first bid to the second bid, and what the new items were. And it's clear, the new estimate from the engineer was $1.2 million. So what he's saying here is his original estimate for a smaller scope of work was $1.7 million. You have a larger scope of work, his estimate dropped from $1.2 million. Where did he get that information from? Most likely he got it from the first bid. And this caught our eye, we're presenting it, and we're not commenting whether it was proper or not, but we are looking at this, to us, we were concerned about it. Now, Tenco and Kevin Nugent Construction, we just have a little comment here. What happened was, during the scope of the examination, we noticed that up to a point in time, Kevin Nugent is doing business directly with the village. At some point in time, we don't see him having any more payments, we see the payments going through Tenco, which I believe is owned by his sons. And what we've done here, we've presented some examples. The only way you'd see this is the final release of lien. So those are in the village files, and we've provided some examples, and you can see where, this would be the total contract that went to Tenco, for example, which is $1,012,000, the one we just talked about. And of that amount, Kevin Nugent Construction got $107,000. So now his work is being run through his sons. And we provided 2 or 3 of those. Here's another one where the contract was $2.164 million, and Mr. Nugent had a contract for total $415,500. The other thing we looked at is the difference between Tenco winning bid and the second bid. And here's another example here on this is on March 17, 2022. They win the bid with $994,988, and the second bidder came in at $1,000,001. So now you've seen 2 examples already where you have the difference between their winning bid and the runner-up is very close. Here's another example. Here's another waiver of lien where you have Tenco's formal total contract is $1,064,000, and Kevin Nugent had their piece of that contract was $330,000. We've already given you the total payments on this one. We provide on these three contracts. We show you the total contract to Tenco and how much of that went to Kevin Nugent. They got $4.2 million, and he got $852,000. Here's another example. They win with $315,000. The runner-up gets $316,000. And if you'll notice as you go through these, a lot of times the third and fourth bidders, there's quite a bit of difference. This one's a slightly larger one, $1,897,000, $2,135,000. They got a lot. They were awarded a lot of contracts in a rather tight time frame. So we see differences of 1% in 2 bids and 12% of 1 bid. And so our summary here, we go through this a little bit between the ones that they were awarded, considering that they were related to one of the village officials. Then we also looked at, we found it was rather interesting. So we have the engineer's estimates, and the engineer is always estimating higher than the actual bids come in. And in one case, he was 135% higher. In one case, he's 23% higher, 6%, 21, and 11. In my experience in construction, sometimes you're higher, sometimes you're lower. But we built some pretty big plans. We don't see a great deal of transparency, which is one of the themes that's coming through this entire process and the bidding documents. And we can't tell, for example, we would like to see the bids come in directly, and they come right in sealed and they're open and in a more public environment, because what we see is a couple of village officials in a room opening them, and they're being whisked right off to the engineer. And that's the takeaway. You can see this whole process, and that's the takeaway from this section a little bit. Now we're going to talk about the golf course. Okay. The golf course sale, so I'm sure you all know the history of the golf course. We studied it quite a bit. And I won't go through the history, but the land itself there were two deeds. And one deed went from the hospital to the state, and it came from the state to Manteno. The other deed went directly from the hospital to Manteno. The one that went to the state contained what they call a reverter clause. The reverter clause stated, should the city of Manteno fail to use the property for public purposes or allow non-public use, fail to improve the property within 10 years, or attempt to sell the property shall revert to the state of Illinois. Now, what we did is we went back and we went through the history of this situation. So, the village was aware of the reverter clause issue 20 years, and they talked about it for 20 years. And we found a lot of correspondence going back and forth about it. So they talked about, we saw, here is the actual deed right here. It's actually done twice. Apparently there was an error in the first deed. And here's the deed with here's the deed for the other property, and here's the deed that contains the reverter clause. Why the state put the reverter clause in there, we don't know. It's there. Now, they looked at this. Here's an example of a discussion going back, what year was this? Quite a while ago. John Nelson was the chairman of the finance committee. And one of the concerns that they raised, some people raised back in the early 2000s, is in order to sell if they wanted to sell the golf course, they needed to have a referendum. And several people raised it. I don't believe they had a referendum, but later that disappeared in the discussions. And I went through the documents we did, and we don't see we didn't see the requirement for a referendum unless we missed something. And they don't say when they see the need for it, they don't say why they see the need for it, they just talk about it. And here's another opinion from Stuart Diamond, who we've actually worked with a little bit, going from 2004, it's quite a while ago. And he's talking about the reverter clause and what they have to do with it. So we see a lot of discussion about the reverter clause, but I'm not sure what actions the village took over the years to do anything about it. Now, when they decide, in 19, the village decided to get rid of the reverter clause. And they went the legislative route. So on February 15, 2019, the Senator Sims introduced a bill, just for Manteno, it was Senate Bill 1597, to authorize the state to remove the reverter clause. And we're providing the act. Now, during the process, the state added some other issues that they called them non-controversial, but they added some other issues to this in addition to Manteno. So you've actually got the legislation of Manteno, you've got three other pieces. Our reading of this is this didn't have a problem in the Illinois Senate, but it did have a problem in the Illinois House. And when it got to the House, they wanted to be paid. They wanted the state to be paid to remove the reverter clause. Now, we didn't see, at that point, we didn't see any discussion coming back to the board openly saying they want money, what are we gonna do about it? We just see them going forward. So they wanted three proposals, three valuations. and they went out, and they got respectable, valuations, and those are in our exhibits. They got 3 valuations from 3 different firms. The valuations were procured by the village attorney. And they did they all came at the same time, and they all did the inspection on July 2nd. They came up with 3 different valuations. One for over $1 million, one for $325 or $295, and one for $380. Now, the problem with the valuations is only that they don't all appear to be using the same premise and coming up to their numbers. But they all appear to be looking at it as a golf course and not necessarily the land. In our report are the cover pages for the 3 valuations, no valuations of appraisals. Another comment we wanted to make here. Now, the contract apparently to obtain the valuations was made by the village attorney, but the law firm didn't pay the bills for these valuations, which came to about $20,000 in total. They were paid for directly by Manteno, but we don't believe that Manteno had the agreement with the firms, and we were wondering why the law firm didn't pay for the valuations, and then, because the village was dealing with the law firm, not with these firms. And our thought was that the check should have been written by the law firm and then passed on as an expense to the village. During the time that this was all in the legislature, we didn't see any evidence that there were any open discussions within the village. What we did see is we saw a board meeting on January 21st, 2020, where they introduced the ordinance to buy out the reverted clause. The reverted clause cost the village $352,000. So if you add the reverted clause and you add the cost, excuse me, the other expenses involved, you're looking, I'm gonna use a rough number on $400,000. So that's what it costs to go through this whole process. Now, the other thing we're providing you is we're providing you with some email chains which will help you understand the entire process of dealing between the village, dealing with the Illinois legislature, and dealing with members of the village and with the village attorney on how this whole process played out. One of the things that we noticed as we were going through this is that both the mayor, we saw one reference from the mayor and many references from the village attorney. They're not using their official email accounts, they're using AOL accounts. We just wanted to bring that to your attention. Then on this page here is the actual check from the bank to buy out the reverted clause. On this page here, page 176 of our report, this is the note that leads us to believe that it was the Senate not having a problem and it was the House having the problem and wanting to see money to buy out the reverted clause. I'm gonna go a little bit out of order here. So we've seen this big effort to get rid of the reverted clause so they could sell the land. But if the village wants to do something else, they can do a lot of things with the land. They don't need to pay a dime. They can turn it into anything. They could turn it into a lake. They could build a different park there. And in that case, as long as they're using it for a public purpose, it's only when they're selling it privately that they have to settle the reverted clause. They also had the option, apparently, of keeping this one tract of land and selling the other one and it not costing anything. Talking about the golf course. So, there was several, the village operated the golf course for a while, and then there was a nonprofit, it was a 501c3, took over the golf course. This is the IRS approval for the 501c3. And in 19, excuse me, Mayor Moore resigned from the nonprofit running the golf course. And that seems to have triggered the effort to get rid of the reverter clause so they could sell it. Now, what happened here is the golf course applied for the nonprofit went out and they got a PPP loan from the government for I think it's like $20,000. We have that in here a little bit. And they got the money, and they got the money because they said they had payroll expenses. And that money was forgiven. However, so while they're saying in the year that they got the money, and during the forgiveness period, they're saying they had these expenses, when all this went down, they never closed the nonprofit. They just walked away from it. They never filed tax returns, the final tax returns. They've got unfiled tax returns. And then what happened was the IRS threw them out of the nonprofit status for not filing tax returns. So we see it as having unfiled tax returns, both with the feds and the states. There would be two federal returns, the 990 and the 990T. However, at this point, they can't file those anymore because they're no longer nonprofits, so now they would be filing an 1120. But they're saying they had expenses and income, that's the basis of getting the PPP loan, but they never actually finished it up. They did transfer the money back to the village, and the village apparently inherited this issue that they should look into. And we talked about it a little bit. And then we also talked about the last time that when they actually, with the Secretary of State, when they closed business, but they didn't close it with the feds. And here we talk about the whole process of the closure, and there was also land. I mean, there was there was money still due on the series bond of $1.5 million, which we're assuming came out of the ARPA money. Then they put the golf course up for sale. So they advertised it. So you've got this golf course with 160, how many acres? 63 acres. The sale was only advertised here, and they got one bid. And I would have expected them to advertise it on a broader basis. I live on an airport, and when you see airports for sale, you see even airport homes for sale, they're advertised nationally, and there are places to do that. So they got one bid. The bid was for $600,000. The golf course was sold for $600,000. But the way it's broken down on the website for the appraiser, they actually got $570,000 for the land and $30,000 in personal assets. The personal assets would have been the items that were left, maybe the tractor, things left in the clubhouse, etc. You wanna do this? Taylor's gonna talk about, he did the analysis on this, and he's gonna tell you what he did with it.
Sure. So shortly after the golf course itself was sold, both of the parcels were split up a number of times. Now that's much more the full details in the report, but once a couple of segments were split up, some were combined, but a couple of them were sold off, and some of them are still retained by the original purchaser. So we were able to get the current evaluations of it at the time of the close based on the Kankakee assessor public information we were able to retrieve. And then, based on that, so let's just talk about some of the parcels were owned by Alexander Real Properties, and a couple of them which were sold off. One was owned by Affordable Mini Storage Manteno LLC.
Sir, I've given a hard time. Sorry.
Apologies for that. So I was talking, a number of the parcels were split up over time and combined throughout over the past few period where this occurred. One of the parcels is still owned by Alexander Real Properties, while a couple are sold off at a different rate to Affordable Mini Storage LLC and another trust. So based on the assessed value that we were able to uncover here, the parcels themselves, based on the assessor's value, which is of course slightly reduced, total just over $550,000. And that is as of 2024. Now, the sales for the parcels that were sold off, of course, were sold off at a much higher rate per acre, sometimes more, and that's more fully detailed in the report itself. And this sale, now this value does not include, of course, the equipment itself, which the evaluation is suggesting that it's obviously we're inclusive and we'll find more documentation on the evaluations of the equipment itself and what they each could have been sold for beyond the sale price itself. I think that covers mine.
The price per acre average, what he sold it for versus
sorry.
what they sold it for.
So with the sale, the so with an average cost per acre across all the 100 for, it was just over $1,300 per acre, $1,333 per acre. The parcels that were sold, one of them being to a main storage facility as mentioned earlier, sold on roughly $12,000 per acre, the parcel that was sold off.
The other parcels are 13.
And that's one example, we got another parcel off for hire now.
The bottom line is, we don't think the village got full value for the, for that property.
I have a quick question, just to confirm, because I didn't understand what he was saying.
Yeah, okay.
It says on here, the land sold for $570,000, the village spent approximately $400,000 on the reverter clause and associated expenses.
That's correct.
As a result, the village realized about $1,388 per acre,
That's what we're
including the
saying, yes.
clubhouse and related facilities.
Yes.
On November 18th, so-and-so sold 49.38 acres, including the clubhouse, for $646,000 or $13,000 an acre.
Yeah, it's a public record.
Just to clarify that, if we can ask questions.
I want to answer your question.
I want to clarify that too. You said realized $1,380 per acre. That doesn't mean what it was sold for, correct? You just said realized because you're already taking off the cost that the village paid.
Correct.
So it wasn't sold for $1,380.
No, we're saying what you got net.
Okay, I think that's a good clarification, because that made it sound like we just sold it for $10,000.
No, that's what you got per,
Okay.
yeah. Okay, that concludes the essence of our report.
Okay. I have a statement to read. Thank you, by the way.
You're welcome.
Very good job reporting that. When we were elected in April of 2025, we asked for a forensic audit to see where we stand. Our goals were to find out how much money we really have, to note where the village money has been used, and to see if village money was handled correctly. The audit discovered several findings that have answered those three questions. The audit has found a pattern of mismanagement of village funds in in which money has been used for purposes other than those that prioritize the greater good of Manteno. What will be changed based on the audit results? Number one, we can identify a need for new protocols and how money is being transacted, who approves such transactions, and an approval for the purpose. How does the greater village benefit of such financial transactions? Number two, we can identify a need for new protocols and how the bid process is conducted, as the auditor highlighted an alarmingly abnormal statistic of one vendor, amazingly just underbidding a large percentage of all sealed bids, a statistical anomaly. And number three, we can identify a need for new protocol in how the village hires employees. Number four, spending patterns were identified that suggest that village money was often deliberately and regularly handled in ways that do not serve the greater interests of the villagers of Manteno, but instead were ways described by auditors as highly irregular. The irregularities outlined by the auditors show a clear pattern in which village money was being manipulated and mismanaged for the apparent benefit of a select few. Moving forward, there will be changes made to correct the irregularities. None of us should be comfortable with the culture of the past. The people of Manteno deserve complete transparency as to how our money is spent. Now, Mr. Edmondstone said that he was going to take questions from the trustees first, and we would like you to keep them short because he really didn't want to spend the night here. So if any of the trustees have a question, now is your chance to ask.
Okay, I mean, I have a lot of questions, but, we can go through it. We'll just start very broad. So you made this report, it's great. If we turn this into the state attorney, this is what, to me, a forensic audit is anybody getting arrested?
That's not my call. But I did want to say one other thing, since you brought I brought up at one point the requirement that the board and the state had put in to have written procedures. I didn't see any evidence that that was followed up on by the trustees, which tells me that there's a hole in your process, that you set out requirements and then years later it's still not done. Nobody says anything until we come along, and you guys should have followed up on it.
Thank you.
I got more, but I got more.
We're just doing
Yeah,
short
you can go around,
questions.
Jake, we'll just start.
You know,
Let's go
I was
through
kind
this.
of concerned about the PPP loans
Yeah.
and that in, the funds.
Give your mic on.
About the PPP loans, and how were they used, you know, for the kitchen and all that out. Yeah, can you explain that a little bit?
Well, what I can do is talk about PPP loans in general. We didn't spend a lot of time on it. There's two parts to the PPP loan. So you apply for the money, and if you meet the requirements, you get the money. Back then, they were handing out the money with not a lot of oversight because the way they set it up, the government basically gave the requirements to the bank. They said, and the banks set up a PPP loan department and they handed out the money. And generally, it wasn't the people that you did business with on a regular basis, it was a very specific piece. And we had some other clients that we run into this. Then there is a requirement that you met certain thresholds to get it forgiven. And there's a payroll piece, there's utilities piece. There was specific things, if you met those requirements and you could document it over a specific period of time, things either 12 weeks or 26 weeks. Then, and you documented that, it was forgiven. The problem that we have seen in some of our work, and that also that you'll see written up in some of the cases, that people applied for it and they actually met the technical requirements, but they didn't need the money, and they went out and they did other stuff with it. They built houses, they bought cars, and then they're getting prosecuted for it. But it took years to get there. In your case, our concern was more with the way it was shut down, and you sort of, you closed it with the state, but you walked away with the federal requirements, and it could come back to haunt you, and you'll fix it.
To be clear, that's not the village, that was the Save Our Golf Course Committee, correct?
Yes, it was, but the village sort of inherited it when they took it over.
So to be clear on that too, we did not receive any funds from Save Our Golf Course Committee. When they closed, they emptied their own bank account and we never saw a dime.
Okay, well, I'm bringing it to your attention.
Yeah, I just want to
Yeah.
clarify that we did not get
Sure.
any money, so I
Okay.
don't know how we would be on the hook for that loan.
Including the back insurance premiums that they owe.
Yeah, they still actually owe us over $28,000
Okay.
in insurance premiums.
All right, let's move on to Todd. Any question?
Was finished?
Yeah, thank you.
Jim, you had mentioned an unidentified $1 million withdrawal. You didn't have documentation for that?
Yes. What we did, we were showing the amounts of part of it is we're missing some of the investments, which you'll see by looking at the differences. But also we're showing the whole process of moving money is shown in the bank statement, and the process, which is the bigger picture of moving the money, isn't really documented, there's not a procedure in place, and there's no controls. And then the person who is reconciling that it was done properly is the same person moving the money. And you need to have a whole system of controls, what can be done.
When you couldn't identify this $1 million, did you go to Chris or Sheila and ask for backup
We did.
documentation?
We did, and we gave you an example of one of them there. So you saw that.
Can you speak to that?
Yeah, I mean, those, as he said, the actual transfers between the banks may not designate, exactly what it's being used for or where it's going. It's transferring from one bank maybe to another bank, in two different accounts. Just like this one shows, we've got the bank statement showing that the $1 million is not unidentified. It's unidentified on the transfers, but it is identified in the general ledger. So I think he's saying, in addition to the general ledger, maybe you should put it on the transfers, that's all.
But that $1 million is not missing.
No,
We're not saying it's missing.
Joel?
And one other point, there was another situation we discussed, Chris has discussed a lot with Sheila. There were, how much, the number, that whole number, 333, we said come up with it. Okay, so there's a series of transfers, which we've talked to Sheila about this. The number that the bank is showing on the bank statements is not a number that she recognizes.
What's gonna be the bank account number?
The bank account number that that the statements show over this period of time isn't a number that she was recognizing, but we know we were able to follow the money. But the number on the bank account didn't match a number that she was aware of. She's gonna speak to that too.
I wanted to speak to that.
Sure.
I've sent several emails explaining that.
Yeah.
The bank used our FEIN number. It's not an account number.
That is
It's
the
our
FEIN.
tax number to identify us as the Village of Manteno.
Joel, did you have a question?
She's saying the number's 3724, not 5980. Okay, okay, we didn't put it in the report, we just wanted to bring it since we were all here. Okay,
I have
sure.
quite a few comments, but I'm gonna try to get two of them in one spot. We talked about the appropriation of funds and people having control, and whether their families benefiting from that. And so, this is two-parted. First one deals with our treasurer and the relationship with her husband working at the banks and being CEO, et cetera. You had said yourself in the report that we have good controls put in place, that she just transfers the money. The village trustees decide where the money's going. So there couldn't be a conflict of interest there because she doesn't have a decision as to which bank the money goes to. Then, when it comes to, in this one's the longer, bigger version, talking about Tenco and the former mayor, boy, I don't even know where to start with this. First of all, again, the mayor, during your review, did you see one time that the mayor ever cast a vote to award a bid to Tenco or Kevin Nugent? The answer to that is no. Correct? Secondly,
The mayor only votes if there's a tie.
excuse me, I have the floor.
The mayor only votes if there's a
Secondly,
tie.
talk about the business being done with Kevin Nugent doing business with the village. Would it surprise you that Mr. Nugent sold that business in 2010 and has not worked since 2010 and has been retired? So there's some misinformation there. Secondly, if we look at the bids and talk about how our bids went, I spent a little time and looked at if we would've went during this time frame and awarded every single bid to the next lowest bidder, the village would have spent an extra $1,067,000 during that time. So, again, I think that I question if this is a little bit of a witch hunt, from the standpoint, and I was one who voted to have this audit done. I will say that I see nowhere in the reports during that time frame that we tallied up how much KVCC made, how much Gallagher Asphalt made, how much Viscering made. We only focused on Nugent Construction and Tenco. I find that a bit disturbing, because I don't know that we've looked at it, and do we know if any of the elected officials were related to anyone that worked at any of those places? The answer is probably not. I think there's a lot of other unanswered questions, but I'll let it go on, because I can go on. I've got about 6 pages of
If I
questions.
can clarify too on the bid process, everyone that I ever attended at Village Hall was not just village employees, it was the village engineer, and also every contractor that, provided a bid, a sealed bid, they were in those bid openings as well. So, had there been any shenanigans going on, I'm pretty sure you would have heard from some of those contractors if they did not feel it was a fair process.
Yeah. Not hear anything.
Can I have another
I
question?
think we're gonna keep going around.
I got brought into it, so I'd like to, I have 150 questions I can ask you about this whole process, but I think you're gonna be lucky to get out of this, the way it is right now. You brought my name into it about using the AOL account. What was the significance of that?
That's a private account, we just mentioned it.
Okay, do you know that, did you call me at all during this process to ask me about anything?
No,
Alright, did you know that I originally started my conversations with the state with my LFC LTD account?
no, I just presented what we saw.
Okay, well, no, you selectively presented a couple of things, right? You bolded
I
the
bolded
AOL
that
account.
2 people use the AOL account.
So bear with me
And
here.
the one that caught my eye originally was, Mr. Nugent.
You're right. No, I get it. Do you know if Mayor Nugent, by the way, used his Village of Manteno account from, let's see, the first day he was elected till the day he left?
I just pointed out what I saw.
Okay, let me ask you another question. So, I have 50, 75, 100 emails regarding the golf course on LFC LTD. Did you know that?
These are the ones that we found.
You found it, and it was forwarded, those emails were forwarded, the beginning of that email chain is a forward from the state, right? The state is emailing me.
Right.
Did you know on April 2019, I emailed them and said my work email was down?
No, but I will say that we did
Thank you.
provide a draft report on April 28th, and the only response we received was from Sheila. We got a lot of information back from Sheila, and we're all welcome to provide feedback. Had you provided it, we would have included it.
Well, I just think you would have reached out to me, because I was the one dealing with the golf course. And your review of the appraisal was wrong. You said over $1 million, and it was at page 31, I think, that. it actually appraises the property much lower.
Yeah, the appraisals are included in the background, but there again, we reported all of the exhibits, and the only person we got feedback from in detail was Sheila. We thank her for it.
Okay, CJ, you had another question?
Just, National Bank of Manteno, you brought that up because, the son-in-law of the former mayor had an account there. Now, I wanna clarify this because obviously we have multiple banks in town. You were kinda maybe alluding that we put money there because, or the village put money there because it's the son-in-law's bank. Chris, could you clarify with interest rates why we chose that bank, and did we ask the other banks in town to match that rate, to meet that rate? It was mentioned in the village notes, but how that works?
Yeah, so when we originally were getting the $25 million, we did hold meetings at Village Hall with Mayor Nugent. I'm not sure if, the finance chair, Geske, was there for all of them. But we reached out to probably 5 or 6 different banks, including several from Chicago, to see what the best, vehicles were gonna be to invest that money. And through those meetings, we decided that we wanted to, again, try and keep the money as local as possible. We did put it in Homestar Bank for the initial year because they gave us the best rates. Each time those CDs came due, I sent out emails to the 4 local banks, and we got CD rates from them and their terms, and then we presented them at the finance meetings, and then the board decided where the money should go based on trying to get the best rate, most bang for our buck as we could. So there was a process, but the previous board, their intention was to keep the money local.
And let's clarify too, those finance meetings, those were public meetings, anybody could have came to those meetings.
Correct. I mean, if there is not a complete details in those minutes, I think if you look at our current minutes, there's probably a lot of detail missing. You know, the clerks do the best they can. There's a lot of stuff that goes on. They're not gonna give you every detail that was discussed at a meeting.
Did they look at the committee minutes or just the village board meetings?
It was usually discussed at committee meetings.
How long have we had money at Homestar?
I couldn't tell you. I've been here 14 years and
Was it before we had hired Treasurer Martin?
oh yes, for sure.
Yeah.
The number that I heard, and again, research I did, 1946 when the village started using Homestar Bank. That was before I was born.
And I'm gonna guess as a small town, we've had trustees, mayors that may have had connections to Homestar. I know Mayor Lamore, didn't your father help found, or you guys were stockholders of Homestar at some point?
My grandfather was one of the founders.
Correct, so like it's a small town, so connections are gonna be made there too. I just wanna make that aware too.
Can I give you one other suggestion? So one of the other clients, it's a city a little, quite a bit larger than yours, but when they have meetings, what they do in addition to, they have the agenda, and then with the agenda, and we've seen this at other clients we've had too, they have the packet. So the packet that the trustees, the public also receives. So whatever, if we were gonna present this, then it was a draft, for example, then our draft would have been in the packet before the meeting, so people that attended, whether they attended in person or not, they have information. One of the things we found is that we see the minutes, but we don't feel the minutes are always, they're informative as to the decisions that were made, but not necessarily, that you were just describing the process, they're not necessarily informative of the process that you went through to get there.
Thank you.
Hey, one of the big, you've already talked, I'm gonna talk. I have a question for you. We had $25 million in the bank. How much were we insured for?
Well, okay, so you were insured through the CDARSs.
For
So,
$25 million.
so what happened is they made the CDs go to Homestar, then Homestar shows it as a deposit, but then they invested it in these other banks, and then, I think we gave an example of it.
But we also dealt with the bank that had questionable practices, right?
Right, and we presented the whole thing, but they went through the Interfi, and whether you got the best rates or not, I have no idea, because we didn't see the documentation.
And secondly, with those bid numbers that you've given on this report here, that doesn't show the extras or the overcharges of how those projects were fully completed. That was just a bid.
If you wanna see, yes, actually they do, for the 3 jobs that I presented to release a lien, that would be the final cost that went through. I need to go pretty soon, do you want to?
And I wanted to open this up to people
Yeah.
who signed up to speak tonight.
I wanna make one comment here before we do that. I wanna speak to a narrative that was somewhat created here between Tenco Excavating and Kevin Nugent Construction. During your presentation of the waivers, I think everybody in this room knows that Tenco Excavating is an excavating contractor and Kevin Nugent Construction is a concrete contractor.
Union and non-union.
They work hand in hand, right? And Tenco subcontracted Nugent Construction to do the concrete work. So it's not like Tenco just paid Kevin Nugent Construction money because of whatever reason. They were an actual subcontractor on multiple projects throughout this village. And that's why they were paid that money.
Thank you. All right, we had some people who signed up, and if you want to ask a question and come to the microphone, you're welcome to have a couple minutes, but not more, because Mr. Edmonstone has to leave. Sandy Chiz.
I'm gonna pass.
Okay. Ann Gates. Please keep it very short.
No problem.
Thank you for all the information that you share. Even though I don't live in Manteno, what happens here affects where I live. So thank you, I appreciate it. And thank you, Mr. Betsky, for voting to have this done. You were the only trustee that did, and I appreciate that, besides Mike and Peggy, of course. But I appreciate that. That shows that your desire in your heart is to be open and transparent with the people to the best of your ability. And I appreciate that. What I don't appreciate is the colorization that some people have brought to this. Numbers don't have a political identity. They don't have an agenda. They don't have any personal vendetta. They have nothing. Numbers are numbers. You follow the money. The money goes where people put it. And these people have been very gracious to do it in a very nice way. I've been involved in things like this before, and it went nothing like this. And there were people that should have been arrested. And to ask if anybody is going to be arrested really speaks to where the mindset is. We shouldn't look at this as, well, who did this evil and who did this wrong? Let's take the constructive guidelines that were laid down and change what needs to be changed and move forward for the better of the town. Put your little piddly crap-a-lanch aside, because it's like high school playground stuff. We're adults here, so take the information, use it, revamp what you need to, show a little respect for one another, and show respect for the mayor, because I bet you, if any one of you guys bought a brand new business, you would do an audit like this to make sure that what you were taking on was fair, just, and legal, that you weren't gonna be on the line for something that you didn't do. So let's pay some due respect here. She came in for that purpose, so thank you, Madam Mayor, that you care enough about this town to want to start with a clean slate. So let's go from here, guys.
You know what, Mrs. Gates, I agree with you. I think through this process, we maybe do have to look at our processes a little bit better, and maybe fine tune the processes.
Right.
We're a small village. We don't have an abundance of staff to have all of these, guardrails in effect. So at the end of the day, yes, I agree with you. We should probably look at the process and maybe, update them a little bit.
Well, yeah.
Right? But also at the end of the day, I don't think this proved that there's any missing money, anybody did
But
anything
nobody said
illegally
that.
or fraudulent.
But nobody
Well, it was
said
all
that.
paid out to the
I'm
Nugent
just
family.
stating.
That-
I
see, this
agree
is
with
the
your
thing.
process.
You guys are the one that's putting that out there. They're not. They're only directing to the things that need to be changed and improved. So let's not go on a witch hunt, because that's not the purpose of this. The purpose is to find what's
Trustee
wrong
Gaskins said, I
and
agree.
correct it.
I agree.
Thank you for your time, Madam.
Francine Fatima, did you want to speak?
You want to speak? Thank you.
All right. Greg Olajar. Greg Olajar, are you here?
He's coming.
Just wanted to say a couple words. Your comment earlier about is anyone gonna go to jail? I agree with the speaker before, that's not the purpose of this. I think the purpose was to find, just because nothing was done illegally, doesn't mean that things weren't mismanaged. Like you guys said, there are processes that can get better, and I hope that this board works towards that. I moved here in 2020, so I don't have a bunch of, I can't really speak much on the last 10 or 15 years or whatever happened before. I don't know. The one thing that really bothered me was your attitude and your three on Monday. A lot of us came here. I'm glad to see more people here today, but on Monday, a lot of people came here to see the results of the audit. And the little games and charades that you guys played was unacceptable. We took time out of our day to come and see what we've been waiting a long time. We didn't know. They could have found absolutely nothing wrong. You guys did a great job. And we would have applauded it.
The problem is talk about games and charades. The draft versus the report that's there, there's a difference of about 19 pages.
Why are
It
you?
wasn't 19 pages added on the end, there was content added in within here. We have to have time to review it, to be able to ask questions, because you know what? I don't think we're gonna see them back here to answer questions. We've got one opportunity for our $170,000 that we spend of village money to ask questions. So, yes, we did want it, and what you don't know is that there were 4 different officials who asked that we table it and move it, give us at least 48 hours to review. And we were not provided that. So that's why the quote-unquote games, we wanted to be prepared to be able to ask intelligent questions.
Why did you guys need that ability? But all we've heard is just what he's talked about. We didn't have 48 hours to look it over, to ask proper questions today.
I'll be honest with you. I wanted this posted on our village
Okay.
website 2 nights ago.
That would have been great.
So this way you guys would have had the same opportunity. Now, the real reason why you don't have that opportunity, and Chris, you could tell me if I'm right or wrong, because the auditor didn't redact all of our bank account numbers and give us a redacted copy for us to be able to post on there for you guys to see. And we can't have our account numbers out loud. So that's what we're waiting for, and as soon as it's redacted, you will have a copy on our posted website, just so you guys can see everything that's in there. I would love to hand you a copy of it right now.
Thank you. Thank you very much, Chris.
Thanks.
Final speaker is David Bergdahl.
Good evening. Very nice presentation. Woo, my name never came up. You know, it's pretty clear some of the documents you referred to probably were prepared by me a long time ago. What did we learn tonight? We got some procedures that are very much out of date and need to be changed. We have personnel who perhaps need to be differently supervised. And we have trustees and a board that need to be taking a more active role in taking control of these issues. I think we learned a few good things. Money well spent. I'm not sure that we needed to run like rats on Monday night. Afraid to let him make this presentation and not have to return. But the more irritating part of this for me, in kicking this from Monday to tonight, is for those of you that aren't aware, Will County had a transportation public hearing tonight about the development and redevelopment of Peatone-Wilmington Road, which is probably the most important road in Will County dealing east-west that affects us. So I have to choose, do I come to this meeting because you all scurried away and didn't want this presentation Monday night? Or do I go to the transportation meeting and learn about one of the most important east-west development, road development projects that's going to affect us in the next 20 years? Needless to say, I'm not getting paid to do these meetings anymore. So I'm here learning some very valuable information, but the information there would have been just as valuable, if not more. Thank you.
Thank you, David. I'd also like to add that Monday night, when the end of the meeting was canceled and we didn't get to have the audit, there were 371 people on YouTube watching, waiting for the audit, who were very, very severely disappointed. So add that to the crowd that was in here, it was over 400 people that were very disappointed they didn't get to hear this audit on Monday night. So I don't have anything else unless, Jim?
Hi, thank you for this opportunity. We really love working with you folks. We love your village. One other thing I want to clarify, one of the trustees said that Kevin Nugent Construction was sold. Yes, but we just looked at the Secretary of State's website, it was sold to some.
Good one.
Thank you very much.
Okay, thank you.
I wanna say thank you to the auditors, they've been working on this for, I think, 10 months. And for the last 2 months, everybody's been saying, when are we gonna find out, when are we gonna find out? Well, the day finally arrived, so thank you so much to the auditors for all your hard work. We appreciate that very much.
Can I clarify just my comment really quick, just because of why I asked? The reason being was just a forensic audit for everything that I